And good morning, good evening, and good afternoon, ladies and gentlemen. My name is Dr. Greg McLeod, and welcome to another edition of Bulls versus Bears, the weekly Forex forecast. And it's so good to be with you here at the beginning of this week beginning June 18th, 2023. And we're going to get started. And let me go ahead and pull up our screen so we can get going and start sharing and blaring. And I hope you guys are doing well. Happy Father's Day to all you fathers out there, and you know, you guys are the heroes to your children, your wife, and I help a lot of fathers become financially secure using Forex scalping and my unique method. But I want to give you the overview of the market, and we are just going to do that right here when I find our opening cover. Okay. And we're going to share a screen. I love sharing. Sharing is caring, right? And we're going to hit share the screen. And I hope you guys are doing well today. And a beautiful Sunday. Awesome Sunday. And we're going to view on the end of the day. Again, this is brought to you by Elite Traders University. Elite Traders University is an organization who helps traders become professional traders in 90 days or less using our proprietary three-step approach. Our proprietary methodology helps you become masters of the trading world, allows you to obtain prop trading accounts, pass those challenges, and trade that big money, okay? www.elitetradersuniversity.com. And this is weekly forecast, Bulls versus Bears. And we're going to get started. Before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all there is associated with foreign exchange trading. And being a former Wall Street insider, working at one of the world's largest Forex broker dealers in the world, and working at one of the top tier banks in the world, and also one of the top Australian brokers in the world, my analysis and my expertise requires that I show you this risk disclaimer on your screen. And if you watch someone who doesn't have a risk disclaimer on the screen, it's a good chance that they're not legit, okay? And with that, again, I've been doing this for almost close to 30 years. I'm the chairman, founder, CEO of the Elite Traders University. I trade everything from Forex, crypto, commodities, options. I'm one of the leading traders in Forex scalping and short-term day trading. I graduated from UCLA. I have a whole bunch of accolades, a doctorate degree, and a number of things. I've developed many systems. And if you type my name, Greg McLeod, in Google, you're going to find a lot of the articles that are still being used because it's hard to lose the stuff I use. Okay, let's go ahead. We're going to start with we're going to look at the currencies. Also, we're going to look at the indices, but we're going to sort of start with the economic news. Okay, so we're going to use my favorite tool. We're going to use my Market Heatmap. There's an arrangement of currency pairs by percentage change. It tells us what's hopping, what's popping, what's dropping in the market. And you can get free access. Just go to the front page. You don't have to sign up for anything. Absolutely free. Just scroll down, and then you get one of 6 powerful heat maps. The others are for a subscription price, but you can see what's going on in the market. And guess what? It's great because it's Sunday. And but on the front, there's also the economic calendar. If it doesn't show up properly, just refresh the screen and it should, and click show more, and then you show more again, and then you get to see what things are, what's shaking in the market. We're going to start with the economics. In fact, I'm going to be doing on Thursday a webinar on how to trade the news. So you don't want to miss that. You want to sign up for that. Check your email, check your box for our free webinar series. And in fact, you can email me at greg@elitetradersu.com if you are not on my mailing list, or go to elitetradersuniversity.com and sign up for our blueprint or free income blueprint. If you go to the website here, and that way you won't miss any of the events and things that we have. We have free live webinars teaching you the different tips and tricks on trading the euro, how to trade news, how to use stops and limits, and all kinds of things. So let's come to elitetradersuniversity.com. There's also a free masterclass that you can watch for 1 hour to show you what we do in the market. But you want to go to the Income Boost Blueprint, and you can click that, and then you can just get this A great way to learn the profit from the Forex, explanations, tips, resources, valuable discounts on trading tools and services. Let's give us your name and email address. You'll get your free ebook. You'll also be in my mailing list. I won't spam you, but I'll let you know when we have our live webinar events to teach you about trading. So this Thursday, we're going to be talking about a very special one dear to my heart, how to trade the news. Okay. So I'm going to teach you how the news faith strategy, how to interpret various reports, and how to use the economic calendar so you can make more profits more consistently. Okay. So that gives me Thursday, 8 p.m. Eastern time. In order to, you got to go over to my website, elitetradersuniversity.com, get that free ebook, get on my mailing list, and that way you'll get a notification about the upcoming webinar. Okay, enough of that. Let's get into what's going on. Fund with Flags. I just swapped a new name. If you're a Big Bang Theory fan like I am, I love Sheldon's with his girlfriend Amy. They have fun with flags. They talk about different flags. A whole show together get flags, right? So it sounds kind of boring, right? But this is fun with flags, where we look at the flags and we go, that's what we're supposed to trade, okay? And many people will ask me, Greg, what are you supposed to trade? I don't know how to pick a trade. They don't have a systematic approach to finding the market or finding a trade in the market. So I just look at the flag. This flag says Australia. It's the Australian flag. The RBA meeting minutes. RBA stands for Reserve Bank of Australia. It's their central bank, like ours is FOMC, which doesn't even spell bank, but it's the Reserve Bank of Australia. The meeting minutes are basically the notes of the previous meeting. They actually voted to hike rates. And basically this gives you an insight of whether they're going to hike rates in the future, or maybe they're one and done, or so, and a lot of traders will be watching that. Now, you may not know what it says, or it's probably like, oh, blah, 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 blah. However, professional traders, institutions, and hedge funds are going to be listening to different cues, and they're going to be moving the Australian dollar. So that's going to be in play. I would look at it right now, actually, the Australian dollar. Usually, 24 to 48 hours ahead of time, that's the currency that's going to be in play. Now, the next announcement is a high impact item. So it's something that's going to create a lot of market volatility, usually. Tuesday, Tuesday the 20th at 8:30 a.m. Eastern time, we have U.S. building permits. And building permits are very important because before you build a house, you got to pull the permits, right? So looking at permits, and permits, it usually takes months in advance to have a permit. You know how slow bureaucracies are. If you ever try to do a renovation in your home or add a room or something, and you try to get up a permit, and the bureaucracy takes, the red tapes forever in order to get approval. So building permits looks at these permits that get pulled in anticipation of houses being built. If there are a lot of permits, that means there are going to be a lot of houses coming online, and that's going to be good for the economy, builders, plumbers, decorators, roofers, all the people that need to build a house. And that's going to create jobs in the economy, is going to create economic growth. So rising permits is a good thing for the economy. Now, it may not be a good thing for the US dollar, but be a good thing for the economy. So it's expected to rise from 1.417 million permits. That's a lot of permits, right? To 1.425 million permits. So that increase we could see actually the euro, pound, the risk appetite currencies. And I talked about that in my last webinar. What's risk appetite? Hey, I explained that in my last webinar. So come to my webinars on Thursday, 8 p.m. Eastern time. Go to elitetradersuniversity.com to register. But I talked about risk on currencies and how risk on currencies benefit from good economic U.S. news, and usually the dollar suffers. Okay. Now, at 10 a.m., we're going to have Fed Powell's going to speak again. This is his testimony. He just got talking about. He just kept rates unchanged at 5.25, but he said there are going to be continual rate hikes after that. So he says this is a pause, a skip. Okay, not that rates are going to be over. So we're pausing this month. And he says from July on to the end of the year, we're going to be hiking. And so that was negative for the market initially. And then right after that, we saw a big giant rise after that in the market. And when I talk about the market, I'm talking about NASDAQ, S&P 500, if you're in Europe, you're trading you're trading the stocks index, or you're trading the FTSE, the FTSE MIB, which is the Italian stock market, or you're trading any of the other European markets, the Xetra DAX or the CAC 40. Okay, that's the market moving up. Okay, it's also pound versus US dollar, Aussie versus US dollar, New Zealand dollar versus US dollar, and the Canadian dollar versus US dollar. Okay, those all move together against the dollar and against the yen and against the Swiss franc. Okay, so if Powell starts talking, usually when he wags his tongue, he wants the stock market to go down. He wants to lower inflation. So when you see Powell, that name, Powell, and testimony, look for the dollar to rally, look for the Swiss franc and the Japanese yen to rally against the majors. Okay. Then the Bank of England has a rate decision on Thursday. So the pound is going to be in play all week, because usually think of the market, the pound market is like a big train or a big ship, a giant ship in the water. It takes a long time to move. So these guys are positioning themselves, and the pound has been in an uptrend. We may see a continuation of that uptrend in the British pound. And interest rates are the biggest input, or the biggest mover of currencies. They create lots of volatility, because the value of the currency is being established by the Bank of England, the BOE, Bank of England, and they have an interest rate decision. And it's widely expected they're going to raise rates 25 basis points from 4.5% to 4.75%. And usually when we have a hike like that, we see a big volatile move in the currency, okay? Especially after Powell said one thing, probably tanks the market, and then the BOE will probably raise rates, and then we'll probably see the pound rally. And so we might see pound beat up on the euro, so euro pound shorts might look interesting. But I'll talk more about that in the next segment when we talk about the technicals and the technical picture as they pertain to the economic calendar. We put the two together, and that way we can get an overall view of what's going on in the market, okay? And so we also have we got Powell testimony again. He's going to be speaking again. Oh my goodness! So we're sandwiched between two Fed Powell testimonies, and again he may talk down the market. So we may be in a real sideways move where it will rally with the BOE, and then everything sink with the dollar getting stronger the next day with Powell speaking again. Powell is trying to keep that exuberance down. He doesn't want the stock market to go super high, which would create inflation, because everybody's making money, and everyone has money. They'll buy more stuff. They buy more stuff, prices go up, and then inflation is bad. They have to keep hiking rates. So Powell has to watch his words, try to do what they call jawboning the market, using his mouth to lower inflation and to raise the value of the dollar. Okay, so watch that. They call that jawboning. They have different, the central banks have different tools at their disposal. They can use liquidity, especially liquidity auctions and special issuance of bonds and things in order to, in asset purchase programs in order to move rates. But the best thing that they can use that doesn't cost them a dime to do is to move their mouth and say, we are hiking rates and we don't like the markets being too high, and employment is too high. We need more people to lose their jobs. Okay, that's what they're saying in another way, right? So look for that. And then we have UK again. It's like dueling banjos here. So we have this USD JPY, USD GBP. So we have consumer confidence coming out of UK on 7:01 p.m. on Thursday. This is all in Eastern time. And we see an increase of confidence from -27 to -25. Still negative, but it's not as negative, which would be bullish for the currency, right? Now, if it surprises the upside, comes out at -20, or maybe it comes out at 0. Maybe it comes out at 1. Well, 1's a lot more than -25 or 27. And that could really, the bigger the surprise, the bigger the bang that you'll see in the currency movements, okay? And that's why it's important to know. You may not know what all this means. Just know that the numbers are, if it comes in worse than expected, you might see the pound sink. If this comes at -30, well, the pound could go a lot lower, because if people aren't confident, then they might not spend, and the economy slows down, and that's never a good thing, right? At 7:30, we have Japanese data. I'm not a big fan of Japanese data. No one, because they're just, whatever it is, they're going to sell the yen. What are they going to do? Sell the yen. Good news, sell the yen. Bad news, sell the yen. That's all they do, is sell the yen, right? Which means Aussie yen goes up, pound yen goes up, Swiss yen goes up, okay? Dollar yen goes up, so sometimes, right? But euro yen, pound yen, CAD yen, New Zealand yen go up. Why? Because the Bank of Japan is selling their currency, okay? Don't fight the Bank of Japan. And and then after that, so we're looking at the pound retail sales month on month. And YOY means year on year. MOM is not mom. Like, your mom is not trading the pound dollar. Your mom. No. Are you talking about my mom? Oh, about my mom. No. MOM stands for month on month. Okay. Don't be talking about my mom, though. Month on month. Okay. And the retail sales number is supposed to fall from 0.5% to negative 0.2%, which can be negative for the currency. However, if this surprises to the upside, we could see a big move in the pound, because the bigger the upside, the bigger surprise, the higher the currency usually moves. Okay. And that's Friday. So that takes care of the week. And then this calendar actually goes next week. We're not going to talk about next week. So basically, the currencies, a lot of different currencies, and I'll definitely look at the S&P 500 and gold as well. But these are this is where the action is going to be this week. It's going to be in the pound. It's going to be in the yen. Of course, the yen's always going to be in play. The yen will be in play, the pound, the US dollar. And when we talk about the US dollar, you're also talking about the euro, because the euro is the anti-dollar, right? So the best way to trade US news is to trade the euro dollar, right? Now, some people like using the Canadian dollar. I just wouldn't use the Swiss franc. The Swiss, it's kind of iffy there. Clocks and chocolate, and they got some nice watches though. And of course, the Australian dollar is going to be in play as well. But it's going to be in play early in the week, so it might not play a bigger part in the currency movement for the rest of the week. It might just trail whatever the pound is doing. Okay, so we've covered the economic calendar. If you have any questions about that, you can always email me at greg@elitetradersu.com and say, hey, Greg, or even just, again, come to our webinar this Friday. We're going to talk about trading the news and how to make it pay, right? The news that pays, right? Let's go to the trading view. And let me go ahead and mute this phone, because it's going to give me a bunch of well wishes for, again, happy Father's Day for those of you who are watching. And we're going to start with a dollar index, the DXY. The dollar index is a basket of currencies versus the US dollar, trading like an index. And I'm using a special type of candle as part of the Forex Power Trader system, which I developed, which has seen some fantastic results for my students. And I'll be talking about that too. If you ask me, just ask me about it. I'll talk about it. If not, don't worry about it. I'm not trying to sell anything right now. Especially when we've got just before we got on the show, on the program. Yeah. So here we go. So yeah, so this was not bad, right? So this was just before we got on. Guy long at 90, 41.90, and this took money out of the market, made $8,230 in just a matter of a few minutes. Some of these trades went from 131 to 204. It took about 30 minutes to do this, and so that was using this new system and using these Heikin-Ashi candles. And I encourage you to just try them. Red is up, green is down. Okay. So I pumped it 3 different times in the market, and one of my students got stopped out. Yeah, because it's been hitting in the more for like the past 2 hours. And usually when you're talking about a trade, if your run's good for 3 hours, and someone says, "Hey, let me get in," like, yeah, it's a little old. It's like coming to a party after like the chips are gone, it's flat, the beer is flat, the chips are all crumbly, and the DJ is packing up and leaving. Hey, where's the party? He's like, yeah, you're late, right? So that's why timing is so important. I'm going to do a webinar on timing too. So make sure you tune in for that. So here's the dollar index here. And we're seeing that we have an uptrend, higher highs and higher lows. However, we've been stuck in the sideways. And this is a monthly chart. Each candle is 1 month. And you can see we have indecision. We have not gone anywhere for 1, 2, 3, 4, 5 months. We've been stuck in a range. Usually the tighter the range, the bigger the breakout. And these are monthly candles. You can imagine the range. You just play the range. From a trend perspective and structure perspective, for all you structure people, we have higher highs and higher lows, right? We have this pullback here, right? We have a pullback, and we haven't broken out of this range. So 105.79. Now, when we have a sideways range like this, what will happen is the other currencies usually you can buy and sell those currencies. They're not beating up on the dollar. The dollar is holding its own. The dollar's not really super gaining, right? But everything is, remember, the dollar is the reserve currency of the world. So everything is priced in dollars. Oil is priced in dollars. Australia selling iron ore to China is priced in dollars. Commodities, all settlements are done in US dollars, unless they do some special currency swap or something, which is really risky for people because the US dollar is guaranteed, backed by the good faith of the United States and the federal government. And if you try to settle in rubles or yuan, well, the spreads are so wide, and their bonds are so unstable that you wind up buying at one price, but when you try to get your money out, the valuation is crazy, right? You get slipped big time. So that's why people like the dollar. It's stable. You can go in and out selling toys or model airplanes or whatever, import, exports, gold, whatever, and you're selling in dollars. It's a pretty stable currency, right? So let's go ahead and go down to a daily chart. And we can see that we've been, ever since we've had this, we had the European Central Bank raised rates, and the dollar just sold off precipitously after Jerome Powell said, hey, we're hiking, we're going to hike, we're going to skip today, but so we saw a big surge here on the 4-hour chart, big surge, and then breakdown, right? And then we can see it was breaking down, right? And so now we're settling down here, and then we have Jerome Powell coming in, and then we also have a Fibonacci from this low, extreme low, to this high, and so we're sitting right at the 618, 61% Fibo, lots of support right there. So I expect for price to move up. So I am bulls versus bears. I am short-term bullish the U.S. dollar with Jerome Powell up for testimony. And he's going to probably talk this U.S. dollar sky high, right? So we're looking at maybe like 104. I think you can trade. He said, "Well, Greg, not everyone can trade the U.S. dollar index, the DXY, or the dollar. Some of the platforms have the dollar index as DOLLAR. The numbers may be a little bit different." Or you might have FXCM, they have the US dollar index, the Dow Jones US dollar index, ticker symbol US dollar. They're all going to have the same shape. The numbers may be different. Bloomberg has their own dollar index, and they'll weight it differently with different currencies. However, the shape is going to be the same, and the valuation, the overall value is going to be the same, right? And the directional bias will be the same. So don't get confused if you say, "Oh, I don't see." My platform doesn't have that. You might have US dollar index, US dollar, right? if you look at the similar, so you see you got a similar shape, right? It just pulled back a little bit deeper, right? Or we're still sitting on. And if we put a fib on this is another dollar index. The numbers are different, but we're sitting at 618, right? Look, the numbers are completely different, but we're sitting in the same area, different index. But the dollar, okay, so let's go to the euro. The euro is called the anti-dollar, and if you put them together, they're on the opposite direction. So here's this. We're going to start from the monthly chart, and we've been we really they raised rates. Inflation is very high in the Eurozone, which means they want to fight that inflation, so they want to keep hiking rates. So they're going to hike, and as they've been hiking, we saw some spike up. So, but we can see that overall, the larger monthly trend is for the weakness because it's the anti-dollar is going the opposite direction of the U.S. dollar. We do have a subtle uptrend here, right? So we have this kind of triangle, and we're looking at some type of resolution out of this triangle, right? And we bounced off this area of support right in here. This 95 area was critical. This whole zone, which was about the year 2000, 2002, that's the lowest point. And we take that all the way across, and you can see that we just came back and tagged the top of that. In fact, take that up to that wick, and we tagged that area, the same high that we had back here. Price has a memory, right? You may forget your wife's anniversary, but guess what? The euro and the currencies don't forget their anniversaries. This is a 23-year anniversary, right? And boom, we hit that top of that right here, right there, and we're off to the races, right? Oh. Yeah, 23 anniversary, we tagged that low, and then boom, we bounced straight up off of it. And and we've also coming up to some Fibonacci resistance from the top last swing down to the low. And we're able to do a webinar too on how to draw Fibonacci's and where to put them, because there's so many places you can put them here, here, here. Why'd you put it there, Greg? It's like, this is, I don't have enough time to tell you why I did, but there is a webinar around that, right? So tune in, okay? So then we're hitting that zone right there, and we can draw, we can look at price hitting that. So short term, I'm bearish the euro. I mean, this is a month chart, but let me dive in a little bit more. Okay, now see, weekly have a different picture, right? On the weekly, we bounced off some support, and we have a double bottom, double bottom, a double top. So we would need to see a break to confirm a resumption of the uptrend. We want to see a break above 109.39. That would see maybe a push into this trend line here at way up at 115. But if we break the low at 106, then we'll probably hit down to 102, and we could continue on to retest the low here at the 95.82 area, right? If the dollar gains back strength, right? So there's a little tug of war, a little battle going on here. Go down to a 4-hour chart, and you can see that after this big down move down, we have a very like an aggressive line based on the hike, the interest rate hike. After the interest rate hike, we saw the euro appreciate. So we're looking for a similar move in the pound, some type of an aggressive move. We're still overall counter trend, but so short term up, right? Medium term over time, I think we go back down. But right now that we have higher highs and higher lows. We haven't broken this trend line here at the the 109.37 area. And if we can break the 109.69, then I think we go back up to 108, 110.86, okay. So that'll be very, very interesting to see that. So short-term bullish, medium-term, very cautious. we break this trend line. I'm looking for a dive down to retest the 106.35 area. But and then this is kind of parabolic. You see how I like shot up vertically like that? Usually parabolic moves, they drop. So but let's not pick a top there. You know, because there's all kinds of congestion here that could just act as rejection. You know, lots of, and we're approaching that, so it may not. The runway higher may be short, and we could get turned around at this. Let me make this red to like show you that this is some overhead supply zone. Supply zone created by this congestion here, and we're not too far away from it. Okay. Let's go ahead and take a look at pound. That's really going to be coming up. GBP USD. And again, we have this. This is a very parabolic move to straight up on the let's go monthly chart, and we are the coronation of King Charles. This has been a rocket ship up, right? From the lows, you can see Hakinashi. We just hit the lows around the 103, and we're at 126, like a 2,000 pip move from the lows, right? Pretty impressive move on the pound, on cable, GBP USD on fire, right? Even fighting against the Fed rate hikes, it's still we're seeing some nice movement. And usually we get spiked down that low, we go back to old highs here. And we got, what's that? Old highs in the 140 area, 142 area. I'm going to cautiously like that. So we actually see, over time, we may see price move here. That 142.64 area, which is the high that we had on August 2nd, 2021. We can move down to a weekly chart, and you can see higher highs, higher lows. We had double top, right? That's all we got. And that's a typical double top, that was a fairly good move. If you took that short, congratulations. But yeah, Greg, I took that short, awesome. But the overall trend is up, so the pullback was very low. And so we pull back, reverse, broke to a new high, and we might have some more movement. We can take a Fibonacci expansion. Another great course we can do is a Fibonacci expansion, or you can just get into the boot camp, and I cover all that in 81 videos. And we start at freshman level, sophomore, junior, senior level, and we cover all the aspects, as well as include the Forex power strategy. And we have a special Father's Day sale that's going on right now too. And so I'll put that in the description in the video if you are so inclined to take advantage of it. It's 50% off. But anyway, so we have this, we take this move higher from the low. The 100% expansion is at 31.91. So I am this bullish, but let's say we get to here. That's not a bad move, especially given the Bank of England announcement coming up. We could continue to run as long as we stay above this area here, the 123.07. That's a support area because it violates structure, higher highs, higher lows. We break that low, we can look for reversal and then probably retest the low. But bulls versus bears, I am constructively bullish on the pound, right? And we're, we might see a little bit of a pullback. Give us an entry into this bullish trend, and they'll be welcome to have a pullback. So I wouldn't jump onto this right away. Usually it's Monday, it's manic Monday, turnaround Tuesday, right? So I'll probably look like around Tuesday to see if I see some type of a pullback here, drop down. And it's like, yeah, it's kind of overextended. I can see a pullback, maybe a pullback to the 126.91 area before I'm thinking of getting long on a pullback. So I am bullish. The pound is in play, right? All right, moving right along to our next currency, we're going to look at the Australian dollar. That's actually coming up before everything else, right? AUD USD for tomorrow, and let's take a look at that. That's the RBA meeting minutes, and you can see how we remove all drawings and move out to our monthly chart. I always want to stick with give you that 50,000 foot overview. You want to, even though we're not going to spend a whole bunch of time on it, but you just get an idea that, wow, after hitting, I remember when these prices were in place, what I was doing when I was like, I think I was it was 2011. I was on the desk at the brokerage when we're trading like that. We hadn't seen highs like that since like 1974 or something like that. Oh, we don't have any data that far back. All right. Anyway, here we go. We got all kinds of support. We're just basically been moving in a range for a while, but now we've got some higher lows where the bears try to push price down to the next low, could not. They were rejection, right? And then so now we have this higher trend line here, right? But we also have a lower sloping supply line, right? Every time we got to a certain price, people sold it, right? So it's like, we're buying fur coats in the summertime, right? No one wants to buy them, so they keep discounting them. This is a discount. Hey, yeah, 61.80, I'll buy it. Starting to get a little chilly outside, right? So that creates demand, right? And then say, but all of a sudden the cold, it's 95 degrees outside, and they're not moving any jackets. They're discount some more, right? So we want to see if we can see a breaking of this trend line here, breaking the high. The high is at 68.61. We can break that, then we could see, because if we have higher lows and lower highs, this is really indecision. You have overhead supply coming down and demand coming up. And when they meet, when buyers outnumber sellers, or when there are more buyers than sellers, and those stops get triggered, as this is moving down, you got to understand that the sellers are placing their stop below the swing high and locking in profit. So they've locked in profit probably around here. So there's a bunch of stops there. It's at 71.97 area, right? And so if price can blow through that, then all this empty space gets filled, right? And then we can see a move from the 71.97 area. We could easily hit 81.17 in no time flat, right? Now however, the people who are long, they have placed their stops here, right? So they swing low and price rallied and dropped. They move their stop up here, prices rallied and dropped. So we got lots of stops in the 61.90 area. So if price broke below that, then that would open up 57.74 easily, right? Because this is the last line of defense. This last swing low was a line of defense. So if price comes back down and hits it. So you don't need special indicators, order blocks, blah, blah, blah. Just look at the wick. The wick tells you, because somebody sold there and they're like saying, oh, please, God, please make it come down. And as soon as it comes down, I'll get out of this order. Okay, I'll just get out of it. And then so those guys are waiting. They've got pending orders to get out of this trade. And price will come right down there and then it'll bounce up. Why? Because those buy orders come in to get them out of a losing short trade that they've been in for, all this time, right? So let's go down to the weekly. And you can see that we are, we're challenging with thick candles. In fact, we think we broke, we almost broke out, right? And so this is, you look at this little pattern, little AB equals CD pattern. You got this little like Gartley kind of ABCD pattern, A, B equals C, and then D usually is 100%. Well, that's 100% there, but my 1.618 is 1.618. Okay. So it might go A, B equals C, D, and then that would be our, Or it gives you Fibonacci expansions where, H.M. Gartley invented, the Gartley is like the crab and the butterflies. But there you go. There's our Well, that's 1.27. So that's 1.618 would be, over time would be like here, right? So it says 1.27 on the expansion. But the typical target would be like this old high, which is 71.78, right? 71.78. So that's still 71.78 is like 200 pips away from where we are. So, I mean, that's a weekly chart. Go down to a daily, and you can see lots of running green candles. So, well, Greg, where is the Harami and the bullish engulfing and all that? It's like, yeah, we kind of moved past that. I know. Steve Neeson brought candlesticks to the Western world back in 1994. In fact, I was trading probably 2 years after that, and we were using bar charts, right? Back in the day, we were using them bars. It's like, what the? And they had inside, outside day and inside day, and you had different names, but they weren't like the Japanese ones, yeah, right? The Japanese ones were like, oh wow, this is like the new stuff there, right? Everybody was using that. And the candles came about like right after the, it took a long time for candles to roll out, they all didn't come out in 1994. There are people, I mean, there were basically bar charts were still being used into the 2000s, right? And I remember like drawing them by hand on graph paper. So you got candlesticks that came out, and look at that. Oh, wow, that's an engulfing, that's a run. But you start seeing a whole bunch of patterns. It's like, which ones make any sense, right? And then you start getting these new patterns where they're just, you have to blend them together in a higher time frame. But I just said, you know what? Stop the madness, man. Go to Heikin-Ashi, and there you go. That's clean. Red, sell. Green, buy. But how about the 3 knighting sparrows, 4 ninjas on a shark-filled sea? Lotus pattern. No. Green, up, red, down. That's it. For me, that's what I'm doing. Okay. You guys can have the other stuff. Okay, so higher highs, higher lows. This is a daily chart. Go down to 4 hour. And as you can see, just red, sell, green, buy. Pretty simple stuff. But we do have a congestion zone back there. They're going to run into. You can see all the chop right there. You can still see the chop. It just color coded, right? So we might see some. Now it depends too. If the RBA minutes comes out dovish and they say, "Hey, I think we've hiked enough. We're going to take a break too," just like the Fed. Well, we can see this come down and drop hard, right? So we are kind of like in a zone where we've kind of like overbought zone. So we could come down from here. Bulls versus bears, I'm cautiously bearish, right? On the Australian dollar, right? But I'm looking at, we break structure on the 4 hour and start making a lower high. Like this is our high, this is our higher high, and this was our last low. So I would look for, if price got below this last low here on the 4 hour, then we would probably broken structure. You got like a head and shoulders pattern, and this thing starts trending down. And the dollar, I mean, also take a look at the DXY. Make sure the DXY starts shooting up. Jerome Powell starts hammering, rate hike, rate hike, rate hike, rate hike, rate hike, rate hike. Say that 5 times fast. Rate hike, rate hike, rate hike, rate hike. Well, then we're going to see the dollar being sent up and the Aussie dollar sent down, right? And we might even see something like pound Aussie long that might be, where we have 2 currencies that, one is very sensitive toward the interest rate picture and the one is not. So we look at maybe like the AUD, right? And this is like, we go, we go out to a daily chart on that, and you can see that we are sitting on, now the pound starts taking off and Aussie starts tanking. This pair is going will look likely rally, taking a fib from that low to that high. We're sitting just above the 30% retracement. We could see a quick move from where we are, like the 1869 area. We can see a quick move up to like the 191 area, right? We're sitting on a fib, but we're not really sitting on a fib. We're just a little above, but especially if you have two central banks going at the same time and Jerome Powell going on. Keep your eye on this one. This may actually be a really good one to get into a trade with. Okay. Let's look at the dollar yen and USD. I made some money off dollar yen right now. And let's see if we're at 141.88, and we can see, let's go. I'm gonna go out to the monthly, remove all drawings and start from scratch. And you can see they are we have been in an uptrend since 2011. So that would put us 12 years, right? And you get these guys coming on and they'll say, well, how can the yen get weaker? It's the Bank of Japan keeps printing because they're in debt, like 200% debt to GDP ratio. So they have to keep selling their currency. Okay. And especially they have negative interest rates. Who would buy the yen and hold on to it for an investment? What? Okay. Oh yeah, but why? It's negative interest rates. They will charge you for buying yen. So that's supposed to incentivize you to sell your yen and buy other things, other high yielding currencies, like the US dollar, right? If I trade, basically when you're long dollar yen, you're selling your yen and you're buying dollars with your yen. You're exchanging foreign currency exchange, Forex, right? So I'm getting negative 1.0% on yen. Powell's giving 5.25%. So if I take my yen and buy US dollars with it and just stick it in the bank, I'm going to make like 400 basis points more. That's why this is straight up like it's doing, right? Oh yeah, even the platform is agreeing with me. You hear that chime? So this is a monthly chart. That's a 50,000 foot overview, and you can see that they've been weakening their currency for a really long time. Probably, if you go not just the yen has been really from 1971, from Bretton Woods at 360, is slid all the way down. Right? Actually, this actually is an appreciation. So it actually appreciates in like 1996, and then it bottomed out, and then it started depreciating. So the depreciation actually started heavily in around 2011, right? Now this is the yen going down in value. This is the yen going up in value. And so that's what we would have these big interventions. I remember I started trading the yen in here, and and periodically, you'll get one red candle, and that would be just the Christmas time. You'll get this little boom, 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 like that. All right. Let's look at the S&P 500, or gold. Let's look at gold first. Look at all the currencies, the hard currencies, as well as the fiat currencies. So let's go ahead and look at gold, and that's XAUUSD, right? MOUSE. Okay. And we can see that we are still hovering around these. Look at this monthly chart. We haven't really gone anywhere after hitting that 2000 area, the 2074 area. Woo, everybody was looking for the breakout. Oh, so sad. Never happens, right? Pull back though, we're still close to the highs, and we still have enough trends, higher highs and higher lows. But remember, we have to look at shorter term trends if we are, because you try trading this, you're going to have a big wide stop because it's huge. We're in uptrend, right? On the weekly chart, we've been up and down, up and down, down, up, and then down, up. And actually, we're setting up for another uptrend. Why? Because we have a new line created by 2 points on the line. This is Geometry 101. And you probably skipped class that day or was absent. What's he talking about? You were absent that day, right? We got 2 points to make a line, right? We have 2 points on the line. The third point is actually the first test. This is the first test of this new line. This is the line created here, and this is the first test. 1 point, 2 points. Now, this is the first test of this line. And usually on the test, buyers step in. Buyers will step in, and if we see a break above, and this is on a weekly chart, so a break above, we look for a break above 1969.93, right? So by 1970, we can see a break, and that will be a move to take us back to the old highs, right? That's that. So let's go ahead and bring this down to walk it down to from our weekly down to our daily. And you can see we're sitting on all this support. And like here, support and then breakout, boom, support, looking for a bounce off the trend line and a move higher. Bulls versus bears, I am bullish on gold. Looking to go long. My winner's circle group, I have a private group which I trade with. And we have another group which is led by my top trading student, Jamie. And that's part, you get access to that when you join the mentorship. And that's a pretty cool deal as well. You get 3 days of trading. If you go winner's circle with me, we're doing a trip to Cabo in October. We're going to do mindset training as well, business credit and entity structuring, creating your trading business, also certification to become a Pip N Run or ETU instructor. So that a lot of things come with the winner's circle. The winner's circle is going to be quite an investment. I just recommend you get started, with boot camp, and then see that our stuff is good. Like the calls, you like it, it tastes good, you buy more. You make more, you buy more, you make more, you buy more. It's an endless cycle, right? You don't make any money, then you can't buy anything, right? So my stuff has to be good. So there we go. Gold, I'm looking for northbound move, northbound train higher. Let's go ahead and take a look at, we looked at gold. And silver's probably doing the same thing. I'm not going to spend any time there, but let's go right to the SPX 500. And we'll use the CFD, and we'll use that. And you can see that we have broken higher, way higher. Remember I said that as we go back to our monthly chart, all drawings, and we start that if we break this trend line, which we did, we broke the trend line, and now we're heading higher, right? We got liftoff, right? So all these people are crying wolf, right? Remember the financial news? Saying, oh, we're going to have a recession, and the stock market's going to crash, and blah, 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 blah. Remember I've been telling them bulls versus bears, they're talking out one side of their neck, right? Because they want you to sell your stock so they can buy it back on the cheap, right? So all the news, all the analysts, how many people think that the stock market's going to go down? Hey, most people, and a lot of people got out and they stayed in cash. And look, they're missing it. They're missing NVIDIA. They're missing Microsoft. They're missing Amazon. They're missing Tesla. They're missing these giant moves because guess what? If they stop raising rates, it's going to be a big boom for tech stocks, right? So bulls versus bears, I can walk you down, but look at these green candles. Look at the colors. Keep it simple. Green is up, red is down, and we had inverted head and shoulders, and I showed you that last week. The inverted head and shoulders pattern. Right? And hey, that makes a great webinar too, right? You're like, what's an inverted head and shoulders? Isn't that shampoo? Like, no. It's okay. We all start off going, right? inverted head and shoulders, typical head and shoulder. I mean, I'll teach you how to do that, how to do this and do the measuring objective. And you can take the neckline, the hair, and you can clone it like a sheep and then project one. What's he talking about? He's just making stuff up as he goes. No, he's been doing it for 30 years. You do it in his sleep. I have traded in my sleep too. I made money too. I've lost money in my sleep too, but there you go, right? You got the projection price target, and look, this thing is going up right now. Right, and that's NASDAQ 100. The thing is on fire, right? Because the tech stocks don't like interest rate hikes, right? Look at that. I had arrows pointing like up, breakout, boom, 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 right? And look where it's at, right at old high, price as a memory. And look at all this empty space here, right? Boom. All right, 16,725. Bulls versus bears. I am bullish NASDAQ. Been bullish NASDAQ. When everyone's saying, hey, most people are on the sidelines. Yeah. And when they sell, they buy. When they sell and they buy. When they sell and they buy. Yeah, if you want, this is a Forex power trading system. If you want to learn about that, then let's rock and roll. Let's light this candle and get you making money. And it's fun. Press button, make money, pretty good, right? Anyway, NASDAQ, I did cover. Yeah, Bitcoin, BTC. Let's go ahead and take a look at Bitcoin. The Bitcoin is like really the anti-dollar, right? Bitcoin, XRP, and there we go. We got that surprise breakout. Remember I said we might have a surprise breakout. The Fed's been trying to hold it in a range, and they're succeeding, to basically grind this out. We haven't moved anywhere. This is a monthly chart. Look, month. We're gonna move all the drawings, right? We haven't gone anywhere, right? Low of 15,000, high of 30,000, locked in the range. Weekly chart. Here we go. This looks like a bull flag. We have a bull flag pattern, and we have our flag. And that might be a good webinar too, right? If you're in a flag pattern, and usually flags break to the north side. And when they go in, it's like hot chili peppers. They come out like they go in. It's like TMI, Greg, too much information. So it goes in hot, comes out hot, right? That's what we're looking for, a break. And so I'm cautiously bullish Bitcoin. We're at the 20. I think we can get back to that 31,000. And according to like the if you take the measuring objective takes us back to 42,000, right? We fill in all these red candles. We end up back where we started back in April of 2022, right? So again, I can walk it down from where are we on the monthly, weekly, daily, right? See, it's like it's like an arm wrestler is not really trying 1, 2, 3 times the charm, right? Then we look for, a break higher, looking for at least first TP target is, I'm looking at 31.22, okay? All right, ladies and gentlemen, I want to thank you so much for joining me for Bulls versus Bears. And remember, Elite Traders University is dedicated to helping you succeed as a trader. Why? I do have a mission of having 1,000 traders that will learn my system, invest in themselves, and go on to trade, prop trading money. Hundreds, if not millions of dollars are available. Lots of hot money. People have hot money, they don't know what to do with. I don't know how they got rich, but they want to keep growing it. Maybe they got lucky. Maybe they won the lottery. Maybe they got one winning stock market pick, but they know that they can't survive off of like lucky picks. They have to have a money manager. And I'm building a crew of money managers similar to the turtles. If you ever read the story of the turtles, how a one-man trained 14 traders that became the top hedge fund managers of all time. Now, he trained 14 people and he stopped. He never trained anyone else anymore. Elite Traders University, we have trained close to 300 people, and our goal is to train 1,000 people and being able to get them funded in prop, not just prop trading funds, but also traded in the market here. So, in fact, here is are we still sharing? I want to share my screen, right? So yeah, this is Richard Dennis. He says that winning commodity traders may be made, not born. And so these are his 14 students that he had in 1984 that they enrolled in his system. In 1989, one guy made 124%, 114, 107, 94, and so forth, each one, because they use his high probability system. And so that's what I'm looking to build now. And so I'm looking for committed traders and traders willing to invest in themselves, invest in the system so they can learn it and be able to trade and make money on demand. So if that's you, then go ahead and click the link below, watch our free master class, 4 Pillars of 6 Figures, and then book a call with a member of our team or myself, and let's see if this is the right fit for you. Okay, my name is Greg McLeod, Dr. Greg McLeod from Elite Traders University and the Forex Power Trader System. Talk to you later. Thanks so much. Cheers. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!